Let's start with the most basic question. We hope we're kind of coming out of the pandemic. Where's retail in recovery from what the pandemic did to it?
Look, overall, we're more than back. We're beyond any expectations. Sales are actually at unprecedented levels. This really began last spring, and sales have been accelerating ever since. We've heard all kinds of stories about, slowing down over the summer because of Delta or this or that. The supply chain was scaring people, inflation, all the rest. But when you look at a two-year stack in sales, that is, compare sales today to sales 2 years ago before the pandemic, they've been running up more than 20%, up 22% versus 2 years ago in the most recent sales report, which covered October. 22% in 2 years. And even the normal best of times, that number should be half of that. So sales are actually booming, and I would expect holiday sales to be up double digits versus last year.
How even is the recovery? Are there some parts of the retail sector doing better than others?
Well, there are certainly winners and losers, as there always are. The winners are those that were well positioned before the pandemic, and a few companies that are having kind of a dead cat bounce based on pent-up demand. So the biggest winners are Walmart, Target, Home Depot, Lowe's, Amazon, Costco, giant retailers with broad assortments, the ability to navigate this environment, to get those goods on the floor, and consumers have been flocking both to the physical stores for these companies and to their websites. So they continue to grow at tremendous rates. A few of the companies have done well during the fall that you might not normally expect strategically to be that well positioned. People like a Macy's or a Dillard's or a Kohl's, companies with strong apparel businesses or department stores. But I warn you, the pandemic does not fix a broken strategy. And so some of what you're seeing here is that people were not buying clothing during the pandemic. Now they're coming out and they're buying those goods. Those are not long-term good bets. They have to revolutionize their business model to succeed. That's quite different from the first companies I mentioned, who already have a winning business model and are just putting their foot on the accelerator and growing even faster.
So Jim,
also, no discussion of retail will be complete without mentioning Amazon. I'm sorry, just have to go there, right? And Amazon stock hasn't done very much this year, and in some ways I think that's a huge opportunity because they continue to be the class act of the dominant growth segment in retail, which is e-commerce. So, whatever you may think about Amazon one way or the other, or back to the politicians, everyone else trying to muck around their business, they are the only one who can deliver consistently, no matter what happens to everyone else's supply chain.
I want to come back to Amazon. Before that, just let me pick up on something you said before. 2-3 years ago, I had the impression that department stores, the general department stores, were definitely in decline. Has this changed that at all, or will they remain in decline apart from what you call the dead cat bounce?
Well, I think over the long term, they're still in decline. In the short term, they've picked up quite nicely. But keep in mind, they've lost such massive amounts of market share that when you look at the overall retail sales pie, they're actually kind of irrelevant already. The game's almost over. Sears is gone. Penny's went bankrupt. There's just a shadow of what they used to be. You've got just a few Lord & Taylor went bankrupt. We just got a few of them left, and those have not been growing significantly. I mentioned that 2-year stack in growth that's up more than 20% for retail sales as a whole. The department stores are struggling that same 2 years to get over 10% growth, despite the fact that no one was even buying anything from these stores. They were steeply negative last year. So I don't see this as a long-term win. They will tell you, look, it proves our strategies are working. Macy's will say, look, it's just like what we did in Polaris, Ohio, our model store. It's working everywhere now. Well, I think they're fooling, almost no one but themselves when they say that, because that isn't going to fix anything. To fix a business like that, you have to change who you are to the consumer. And let's be honest, today's millennials do not want to shop where their grandparents shop. They don't want to go to a department store. There has to be more fundamental change.
Are the supply chain problems going to crimp the retail style this season?
Well, somewhat. It's been running up over 20%. And I put out, versus 2 years ago, that's been accelerating, even as we get these bigger months like October, which is the biggest month that we have reported so far. November and December are big months, so you may say, well, we get to those giant months. Are you still going to grow 20% year over year? I think the answer is yes, and it might have grown 30%, believe it or not. The exports from China are running up 30% on that 2-year stack, and the problem is they're stacking up at the port, and all 30% is not getting through the pipe and getting to the stores, as we all know. So that's what the crimp is, but it doesn't mean we won't get that 20% growth, and if holiday sales which they did, grew 8% last year. That leaves 12% growth to get to that 20% for a holiday period, which is a good number by any measure. It doesn't mean everything's going to be available in unlimited supply, nor was that always the case, by the way. I spent a lot of my life running Toys R Us, and the hot toys always sold out, got to tell you that. But meanwhile, this year, probably more hot products will sell out sooner than in other years. But there's still plenty of product out there. These big retailers have stocked up. They have the inventory. They've told you that. You know, they've all said, we've got it, and they do. And if you go to the stores, you may see some empty shelves, but most of them will be full, thank you, and you'll be able to get all the holiday presents you want. Not all the exact presents, but you'll certainly get a great present.
All the presents you want at what price? Because historically, like Black Friday, we hear all these amazing sales, you get all these discounts and things. We got a lot of inflation going on right now, a lot of prices going up. Most consumers you talk to are just talking about how rapidly the price increases are coming. How's it going to affect this holiday season?
So inflation is going to continue. I have no doubt this is not a transitory thing or whatever. It is getting built into the system in so many ways. You know, retailers, for example, can't hire right now very easily. So they're having to raise wages to levels they sort of aim to get to, but now you're like, oh, we're going to get to $15 an hour. Now they're like at $17 an hour. You know, it depends on the market that you're in, but wages are going up very rapidly. All the government programs, those are already passed, the infrastructure program. Who's going to build those bridges? You know, they need more people. So there's no way there's not going to be inflation, labor costs, inflation, other costs, supply chain costs for a long time to come. So inflation is real. The inflation, though, if you look at it in historical context for retail, doesn't really start to hurt the retailers until it gets up in the double digits. When it's at the level it is now, retailers generally can pass those prices along. I think some of them tried too hard not to pass it along. One of the biggest pieces of advice, by the way, I give to my retail clients is, you know, try to front run the price increases. Take as many as you can when you can. You know, that hasn't seen, you know, people, oh, I want to show that I'm caring about my customers. Well, you need to care about your profits too. So, you know, I do think the retailers will pass those prices on. The consumer is flush with cash. By and large, there has not been a lot of price resistance. I think they're going to take those price increases and continue shopping. We heard from a retailer this week like Best Buy, who said that discounts and promotions were actually hurting their margin rate. So they have been discounting pretty heavily off those inflated rates, prices, trying to keep the prices down. I think they may have tried too hard. They didn't need to. Their sales beat numbers. Their profits beat their numbers. I think as we look forward, more retailers are going to figure this out, that you still have to sustain the gross margin rate and your expense rate. And as sales rise, it means that you're going to make a lot of money.